Hello, everyone. It's Chris Hobart, the Wealthologist, here to break down what's happening in the wild world of the U.S. economy. Now, I know the headlines recently can be a little bit all over the place. Some are shouting, a recession is coming, and others are saying, we're in the clear, it's a new day. So today, I wanted to dive into the numbers, maybe look at some of the trends, and really think about what all of this means for you and your financial future. So let's get to it. All right, here's the scoop. The U.S. economy did grow in the fourth quarter of 2024, and it was at an estimated annual rate of 2.8% to be exact. Well, I think we can all agree that's a pretty solid number. Let's not pop champagne just yet. Let me explain why this growth might just be maybe a masking of some bigger problems. First, I want to talk about inflation. It's still hanging above the Federal Reserve's 2% target rate, which means the Fed is unlikely to loosen up on monetary policy anytime soon. What does that really mean? Interest rates are staying higher for longer. Now, if you've got a savings account, you're celebrating. If you're looking to buy a mortgage or refinance, you're like, come on, because we've been in this tightening cycle since 2022. So if you're feeling like things are maybe a little bit squeezed, that could be why. Now, you might be wondering, Chris, if the Fed is raising rates and inflation's a problem, why is the economy still growing? And I got to tell you, if you're asking yourself that is a great question. Now, here's the thing. Over the past 2 years, federal budget deficits have been massive, averaging about 6.5% of GDP or gross domestic product. Now, that's a lot of government spending for a time when unemployment was only about 4% and we weren't at war. Now, this spending has acted like a Band-Aid, temporarily cushioning the economy from the full impact of those higher interest rates. But we all know Band-Aids, they don't last forever. And eventually that pain catches up. And speaking of Band-Aids, there's talk of reducing spending on things like green energy and Medicaid, which might further slow the economy in the short term. So what's keeping the economy afloat right now? Well, I'm going to break down a couple of numbers for you, okay? It's going to get a little bit heavy, but just hang in here because these are important. First, and we love to talk about this one, consumer spending. Americans were out buying cars like hotcakes last quarter. Auto sales grew at a whopping 26.4% annual rate. Now, overall retail spending was just growing at about 1.2%. when you exclude cars. Now, still, consumer spending on goods and services combined added 2.1% to GDP growth. Now, business investment, also a big mover and shaker within our economy. This grew about 2.9%, driven mostly by gains in intellectual property. So businesses are still investing heavy in tech, even with higher borrowing cost, which added 0.4 points to the GDP. Now, what about the housing market? Despite those higher mortgage rates I was just telling you about a bit before, residential construction grew at 2.5%, and housing supply, it's tight. We talked about this a couple of weeks ago, which has been keeping this sector from totally stalling out. Now, that added another 0.1 point to GDP. What about government spending? Direct government purchases, things like infrastructure projects and public services, that grew by 2.3% rate, adding 0.4 points to GDP. Now, on the trade side, imports and exports, they actually pretty much canceled each other out. So there really wasn't an impact on GDP from net exports, but there is a kicker here. Businesses slowed down inventory accumulation in Q4, which actually subtracted 0.2 points from GDP growth. So I told you lots of numbers, right? But let's add it all up. When we add all of those numbers up, we're looking at that 2.8% annualized growth rate, which again, not bad, but certainly not enough to declare the economy is out of the woods. The million-dollar question, are we headed for a recession? Well, with higher interest rates, persistent inflation, and the possibility of tighter government spending, the odds are actually a bit higher than most people think. Now, sure, innovators and entrepreneurs are keeping the economy moving for now, but if Washington doesn't make some big moves like deregulation to boost growth, it could start getting dicey. So what does all this mean for you? Well, it's a reminder to stay prepared, right? Whether it's making sure your investments are diversified properly against asset allocation, or maybe revisiting your budget to make sure you're not overextended, now is a good time to shore up your financial foundation. And Hey, good news. That is what I am here for. So I get to help you make sense of all of it and help you take action. Now, before I go, let me ask you this. If you knew a recession was coming, what's the first thing you do to protect your finances? Uh, Drop your answer in the comments below. I'd love to hear your thoughts and maybe even share a few in an upcoming episode. Remember, we are all in this together, so anything you can share will be great. Now, hopefully you found this breakdown helpful. Don't forget to like it, subscribe, and hit that bell icon for more episodes of the Wealthologist Weekly coming out every week. Let's navigate these economic twists and turns together. And until next time, this is Chris Hobart, the Wealthologist, signing off. Take care and have a great week.